everybody? Welcome to the Get Smart Lives Smart Money Q&A. My name is Lawton Ho, and I'm joined by these two handsome men, one more handsome than the other. I'll let you decide who's who. Welcome to the show, Drew Dosick and Benjamin Poole. What's going on, guys?
Hey, how's it going, Lawton?
What's up, guys?
Yeah, so the way this works, guys, is you're going to go ahead and submit your questions by going to the verifiedinvesting.com homepage, clicking that watch and ask, and you can watch while asking. Pretty self-explanatory. Additionally, guys, I just want to take this opportunity to thank you guys for being here. And if you want to get more content just like this, please consider liking and subscribing. It really helps us and helps our channel grow. With that being said, let's get into some questions. I know Drew was interested in answering, I believe, Christopher's question, right?
Yeah, that's right. Christopher looks like he came out asking about support and resistance on Wolf. Had a nice drop today, and just wondering what the next levels could be. So let's go over that. And Wolf did come out with some news that they are restructuring as far as how they're handling their debt. They are going to be a lot of the shareholders' value is going to be depreciated by about 90%. And that's what's going on right now. That's why the stock's falling and it's trying to sort itself out. Well, right now, today, we actually tagged a support level at gap fill. And the next level down is going to be at 106, followed by 74 cents. But on Monday, all of what's being sorted out now will be finalized. So I am anticipating waiting for the dust to settle before acting on the stock and picking up any more Wolf. So I'm going to see where price settles out Monday. That's going to give us ultimate flexibility should we decide to get into Wolf at that time. But yeah, 106, 74 cents. Resistance to the upside, though, is up here around $2.20. You notice that we pierced that recently. This is a longer-term declining trend line. And if you look here on the monthly chart, you can see how that's isolated too. From a low pivot back in 2018 over here to the pivot in COVID for the March low in COVID. And then price has really just been trailing around that and also getting underneath it over the past several months. So that's the major area of contention on the way up. You can see this zoomed in. Every time we've gotten under, tried to get above, it's gotten rejected, tried to get above, got rejected, got above most recently, and now subsequently has been rejected. So that's the line in the sand. That eventually, I do believe, will get beaten. And what we're going to have happen too when we're down here with this price action so low on the chart, you're likely going to have other competitors or other companies start looking into buying Wolf, which then could also elevate that stock price for it too. So couple reasons to be monitoring support levels down here on Wolf, as we could be getting a bounce up should there be some new interest with other businesses taking it over.
Cool. Good analysis there, Drew. Robin says, I'm currently bearish on Bitcoin, which is why I'm shorting it. The setup is based on two still active weekly topping tails combined with last month's monthly topping tail. My entry was at the 50% retrace of the monthly topping tail. Curious to hear how you guys see this setup.
I love this setup.
Let me share your
So,
screen. Yep.
all right, so here's the chart of Bitcoin. So Bitcoin did put in a monthly topping tail right here on the 1st of December. So it has already negated that. However, as you had mentioned, it has this a monthly topping tail as well. So I think that 50% Fibonacci retracement back to the upside is a great entry. So what you're looking at is the daily time frame. You have these low pivots right here, basically the lower end of that topping tail or the tail of it. And so 107, $107,369 is where you're looking for price action to break. Now, if price action breaks below that, you have this nice down-sloping trend line that's going to be a lot of support. And so if you're looking to take profits, I would look at, based on this down-sloping trend line, I would take profits right around $101,000. So ultimately, I really like your setup. The nice thing about that monthly topping tail that you had mentioned, and a couple weekly topping tails in there as well, is that you have a clear stop out. So if price action does head above that monthly topping tail and closes above, kind of like it did on this monthly topping tail, then you would just stop out of the trade and look for another entry. So yeah, I love it.
Absolutely. All right, next question comes from Alan. And this is a long one, guys.
Oof.
Alan says, and we can talk about this in general, just three of us. Alan says, could we all be wrong? Most of us are in many short positions, but the U.S. has the world's strongest economy. It continues to grind on. And the United States is positioned to do well next year with all of the capital investments, such as factories, infrastructure, power plants, etc., not just data centers. Could we all be wrong? Could it be that there will not be a connection this year or next year? I know there's no crystal ball, but please share your opinion / outlook, not simply the obvious answer, yep, anything's possible. Thanks.
Well, let me start by saying, yes, absolutely anything's possible. And I know that you asked us not to say that. However, if you look at the charts of the S&P 500 and the QQQ, especially the S&P 500, right? So we haven't had any meaningful corrections. However, we're still in this uptrend. So you've got this upsloping trend line that connects 4 or 5 different pivots. As long as we stay above that upsloping trend line, this market continue higher. So it looks like we did have a pierce on the 2nd of September, and it looked like we had more of a sell-off coming into the markets. However, all the bidders came in, scooped the markets up, and is continuing to push the stock higher. So ultimately, I do think that we are on the correct side. We have been wrong, at least a little bit for now. But the thing about swing trading is, there will always be stocks that head higher, and then there will always be stocks that head lower. And so inside of that S&P 500, why it's not smashing up is because inside of there, you do have some stocks that continue a little bit higher, but also you have other ones that crash. And so we're just looking for those small little crashes inside of it before the bigger correction comes, right? So if you would have seen the S&P 500 just skyrocket with every single stock inside of the S&P 500 continuing to elevate the markets substantially higher, then I would say, yes, we're probably really wrong. But because we have this outflow of money in these other stocks, then I think that we're still on the right side of the markets shorting it.
What do you have anything to add to that, Drew? Or
Yeah, I guess I will, because I'm in the agreement with Ben as well. Here, let me show you just this other. Check out this parallel on the spiders, guys. I think this kind of illustrates it pretty well too. Where when we're at, and this is important to remember as an investor, when we're at extreme levels, whether that be high or low, it feels like nothing's going to change the tide. Right? It just feels like that. When we're selling off so hard, it's scary to step up to the plate to buy stocks, like in that time frame in April. Even when we were going into 2022, like all of 21 was just down. Then we're going into 22, and then you see like this, every one of these bounces were just sold into. So it investing, the market has a way of doing that to folks where you feel like almost it's always going to go up, or then when we're in a bear market, it feels like we're just always going to go down. But inevitably, the price does move up and down in these parallels and on the charts, much like what's displayed right there on the screen. We're getting right there near the top. Ben did highlight how we had that trend line, and I agree with him on that trend line. I mean, it's been tagged 5 times. Normally, you're going to have a break before all of these tags occur, and especially considering the time duration of this move. We're now on 172 days from this low. So we're pushing near half a year where we haven't had any sort of substantial pullbacks, and that's unusual. That's very, very unusual for the markets to not at least have 5 or 10% correction. You go all the way back to COVID, and we've got those corrections in COVID. If you look back here, just right here in COVID, here was a pre-COVID high, marching on the way up from this correction before getting up to the COVID high. We had an 8.4% or 8% correction. Then once we got above the COVID high, we had a 10% correction. And if you look to where we're at now and compare that, very similar V-shaped recovery, the most we had in this entire march up was a 3% pullback. That just doesn't make too much sense in the markets. This is not normal. So we should, the longer we continue up, I think the harder we're going to fall, to be quite honest.
I agree.
But it's just a matter of when that time comes.
Yep.
Yeah, and I would just add that, I mean, I run these positions too, and sometimes it's scary, right? Because we're counter trend traders, right? By nature, we're going to be going against the grain, right? But can you really justify buying when the charts look like that? Kind of difficult, right? Kind of hard. All right. Next question. Barcat says, your analysis and thoughts on SLV silver, please. Who wants to take that, or do you want me to take that?
Let's see what you have to say, Lawton.
Sure, let's do it. You get my screen up. All right, so SLV, I'm assuming this is a ETF
For silver.
For silver. All right, so let me just look at the price of silver right before we do anything else. So yeah, silver has been basically up in a straight line, right? And what I like to do when things and stocks, whether it's stocks, commodities, cryptocurrencies are at all-time highs, I try and look for some resistance levels. And without previous price action, if we go to the weekly, we can go back a little further. There isn't too many levels of obvious resistance, right? I had this one here. That I connected through these trend lines up here. And while it did pull back here, it pulled back, let's see how much. Pulled back about 7.5%, which is a good, decent move for silver, right? It's rebounded, ripped through that, and has gone kind of ballistic, right? This doesn't look like a hard commodity. It doesn't look like this doesn't look like a silver chart, right? At all. It looks like the chart of a company that released earnings or a pharmaceutical that got like approved, a drug approved. So let's go back a little further and see if I can find a level of resistance.
So if you switch over to the CFDs on silver, so type in silver again.
Yep.
Try that.
So yeah, there is some resistance here on the CFDs, previous price action. So the obvious level in this case, sorry for my mouse movements, I'm using a trackpad right now. The clear line in the sand, right, is right here at $49.78. Right, there's a clear line in the sand that silver is likely to get a pullback, maybe where it wants to get to from its current price. And you see that as the previous double top. You're talking about a move up an additional 8%, right, which is actually a pretty decent sized move for silver. Prior to that, and if we go to the daily, we might be able to get some better pivots or price action. Just scroll back. Excuse my slow charting. You could see some resistance around here around the $47.98, around the $48 level. So anywhere between $48 and $50, you're likely to see resistance with that major level of resistance right here, just under that $50 level. As far as support levels for silver, I mean, if I was looking at silver, I probably wouldn't be interested in buying until you reached this trend line expecting a bounce. That would be a move down from its current level about 9 or 10% lower. I don't know. Do you guys have anything different? What do you guys think?
That's exactly what I've got. Yeah, that's absolutely exactly what I've got. That double top is really the only next resistance, right? And then you even isolated down another one, which is correct, because it's you highlighted it perfectly, Lawton. It's overbought extremely in the near term. This looks like a tech or drug company. It's
absolutely.
It's just wild what's going on in silver right now. And you know what, Ben? Do you have anything to add with RSI on weekly? Because I know Ben is a specialist in RSI. Matter of fact, he runs a live show Monday through Friday with the RSI trade of the day. And those that don't know, it's the relative strength index. It's a really cool feature and indicator, one of which Ben has specialized here at Verified Investing.
Yeah, so silver also has a weekly topping. I mean, a time count. Time frame. This overextension, although people are bullish on silver, this is actually really inflationary for the economy. So it's an industrial metal as well as kind of a safety asset. But anytime you see something like this that goes into so many different products, this is a cause for concern for the everyday consumer.
That's a really good point. That's a really good point, Ben. A lot of people forget that element of it, right? A lot of cases, people think of silver as like a poor man's gold. a way for somebody to get access to investing in metals and not have to pay up a lot of money for gold. But you're right, Ben. It's an industrial metal, and it kind of measures, you know, the breadth of the economy. But it's important to note about silver. This is going into a lot of computers too, right?
Yeah, absolutely.
So you have the build out of these data centers. So then that kind of makes sense. There's going to be a higher demand for these electronics. And that's what I think we're seeing on the chart of silver, with it ripping higher, and at least in this near term. But one thing I do want to add, Lawton did show that when he scrolled back out. Just notice, and actually, you know what? I'll just flip over. Yeah, you notice right there, Lawton, perfect. That huge spike up that created the previous pivot high. Then look what happened to the right of it, folks. After we made that huge run up, usually this is what happens in charts. When they explode up, you can almost put a mirror right there. When the top is made, you're going to have almost an equal reaction to the other side. It's very scientific in that way. So whenever this pivot ends, we're going to be seeing silver come straight back down. It's just the nature of charts is how it works. It's just a matter of seeing how high it goes before it hits that top.
Absolutely.
All
Cool.
right, what's next?
All right, Dean says, "Hi guys, KDP continues to fall. I'm in at a price around $27 through DCA. Should I buy more or should I count my losses in vamoose?"
It really depends on your overall outlook horizon. Are you investing in this long term, or were you getting in this for a swing trade? This is a dividend paying stock. And so if you look at stocks like GEV or GE, which is split off from GEV and created two companies, which is essentially what KDP is going to do, you will eventually get both shares if they're both publicly traded. And so then you have individual investors, one getting in coffee, one getting into soda, that could actually excel these prices quite a bit higher. So another thing to consider is, based on the fact that it's beaten up on the charts, it could be a lot of institutions dumping it, so that way they're not holding it towards the end of the quarter, showing their investors, hey, you know, we're out of this stock, or we were never in KDP even though it's down significantly. And so next month could be a great buying opportunity for it. So again, it really depends on how leveraged you are, or if you are adding every 10-15% down as in a hodler position wouldn't necessarily be a bad thing if you're looking at it as a long-term investment for the dividend.
Absolutely. And I just want to say that, you know, I love this chart. I'm happy to hold this and slowly collect dividends over time on KDP. So while it's not fun if you're, you know, let's say swing trading it and looking to make a quick gain in the long term, though, I think this is a great level to own some Keurig Dr. Pepper. That's not like they've filed for bankruptcy or even that they had poor earnings. It's just that they're splitting the coffee company and the soda company into two separate stocks, right? Which you're going to get both of anyways. So, all right. Wes says, "Hi guys, I'm new and learning." Nice to have you here, Wes. Happy to see you. Can you please look at my chart for AVNT? I entered for a bounce at the trend line. Is my logic correct, or do you see it more bearish? And Wes did attach his charts there. I don't know who wants to answer this question.
AVNT. Let me take a look. Let me pull up that
Yeah,
link.
and he sent his chart as well.
All right, cool. Yeah, looks like you got a little wedge, buy bounce down there. All right, cool. So if this is on the daily time frame, all right, let's scroll it back out. Wow. All right. So then let's also check out the revenue on this company. All right, so margins are increasing. Last quarter was not good. All right, so color additives. All right, because I am obviously, when I pull up a chart and I don't have trend lines on this, I have not traded this company. So let me pull out and step back another level and see where we're at. Wow, yeah, I don't really. This is kind of a good middle ground area. I do like the wedge that you have on the daily time frame, as this is kind of near-term support right down here where we're at. And if you look on the moving averages, that kind of helps give insight too. especially on the weekly time frame. And if you haven't used the simple moving averages, and you notice what I did there, that you can, on TradingView, you can simply go and select them. This is SMA 20, 50, and 200. That's my preferred time frames for the simple moving averages. And what this does is it helps me gauge where the probabilities are for price to either go up or go down, right? So you can see here, we've had a couple scenarios take place. We recently had a golden cross where the 50 crossed over the 200, but then we followed that up with a death cross where the 50 crossed back over the 200, which has really been keeping price down here. This has happened a series of times over these last several months and years in trading. And so it's really hard to get a good beat on this, especially for the time horizon on it. As far as being oversold in the near term, it's not oversold. I guess on the daily, you could get a small bounce out of this. Depends on what you're wanting to get, but I would be more cautious, since on both the daily and the weekly, the simple moving averages aren't really giving us much positive insight. We see the 20s curling over so fast. We got the red, the 200 sitting on top, and then the 50. When that 20 curls over that 50, we're likely going to create more downside pressure on that stock. Now, is this a place that should bounce? Yes, it should. With this particular pattern, it should, but the bounce could be limited just because of what's going on here in the charts. And if I throw off the simple moving averages and look at the weekly time frame, this is a move down and then sideways chop. So that's basically a big bear flag. That's right there on the chart. Could it fight and break that bear flag? Yes, it could. And then in essence, it would be a failed move for a higher move up. But you're kind of fighting. I guess, long story short, you can get a little bounce off of this trend line, but I just don't know the sticking power on this. So I wouldn't be interested in going long on this instance on AVNT.
All right.
Yeah, I wouldn't get into AVNT for a while. I would need it to drop another like 10, 15%.
Mm-hmm. An area that could be interesting as a starter, we got these pivots, right? Oop. So it's not far away. This would then be a quad bottom, and that can get broken. So yeah, I don't know. I'd rather wait. I'd rather wait on this one until it gives me a better setup. You even had this off of the COVID lows. Let's connect it here, and then somewhere around this area. But with the way the moving averages are, yeah, I would try to find some other stock. I would recommend.
Me too.
Mm-hmm. Yeah, Elon says, thoughts on going long the SQQQ? It is currently at a 52-week low.
So, Lawton, why don't you talk about the SQQQ? Because I know you do a lot of work
Absolutely.
in the SOXS.
Yeah.
Yeah, absolutely. So
SQQQ is what is it, double or triple?
I'm not sure. I think it's double or 1.5. Let's see.
Yeah.
QQQ. It's 3 times inverse.
Okay.
So what that means for all of you people, this is an ETF that tracks the QQQ. It's an ETF that tracks an ETF, right? And not only is it an ETF that tracks an ETF, it's an inverse of that ETF. So when that ETF goes up, this ETF goes down. And on top of that, it is an inverse leveraged ETF of an ETF. So what does that mean that it's leveraged? It means that it moves more than that, more. Like usually a 1-to-1 is inverse ETF is QQQ goes up 1%. The opposite will go down 1%, right? But since this is a 3 times leverage, for every 1% that QQQ goes up, the SQQQ goes down 3%. And if the QQQs go down 1%, the SQQQ goes up 3%. That's a lot of Qs, but not done yet. Not done yet. The reason why, looking at this and being like, oh, wow, the SQQQ is at its 52-week lows. The reason why I wouldn't be a buyer there is, let's look at the chart. You see this? See these little S's, right? What do you think those are? And if we go back historically, do you think that the SQQQ was really ever $300,000? No. The answer is no. Absolutely not. So How did that happen? Why does that happen? And what does that mean for us? Well, that happens because of something called stock splitting or reverse stock splitting, which
That's right.
means if the price of a stock goes too low, a company can elect to reverse stock split. So basically, what that means is if you have 100 shares at $10, they just want to make the value of of each share $100. So you go from owning 10 shares of a stock at $10 to owning one share of a stock at $100, pretty much.
Yep.
It's the opposite of a stock split, right?
Yep.
On top of that, there's something called slippage, right? Because it's an inverse ETF, the moves are on the SQQQ are always going to be proportional in percentage to the QQQ. 1% on the QQQ will cause the SQQQ to move 3%, but that ratio somehow isn't the same. I don't really know how to
All right, so here's how
explain
it
it very
works.
well.
Right, so in order to make a 1% move to the upside, the SQQQ makes a 3% move. Now, if the QQQ moved down 1%, excuse me, let me try again. All right, so if the QQQ moves up 1%, the SQQQ moves down 3%.
Mhm.
Now, if the QQQ moves down 1%, the SQQQ move up 3%. But to capture that whole amount, the SQQQ would then have to go up 3.1 or 3.2%
That
just to
makes
get
sense.
back to
Yeah.
break even. And so as the QQQs continue to rise and have volatility, the value of the SQQQ continues to lower. Even though the Qs are continuing straight, the SQQQ will continue to degrade over time. That's
Absolutely.
just,
That's perfect.
yeah,
Perfect explanation. The only way there's no degradation is if the Qs literally stay the same. No change. No change.
if there
But
was zero volatility
yeah,
whatsoever.
zero volatility.
But
Yep.
if there's
That's
any
the only way.
volatility, then that's how there's slippage.
Yep. There will be
Anyways,
degradation. Yeah.
yeah, back to your question. Thoughts on going long the SQQQ? It's currently on a 52-week low. You can get into the SQQQ if you believe that the Qs are oversold, like we believe, right? But the reason why we just gave that spiel for the last 5 minutes was because the charting the SQQQ and saying that it's at a 52-week low is not good justification for entering this trade, because the current price of SQQQ doesn't truly accurately reflect where it would be on the chart. Whenever you chart, any leveraged ETF, right, or any, even inverse ETF, like, you pretty much want to chart whatever that's based on, and in this case, you're talking about the Qs, the QQQ. So
Yep.
you can want to short it because it's running into this awesome trend line, right? Because it's at all-time highs and it looks like it's getting into a good level favoring a pullback. Those are all great reasons, right? But a reason that is not valid is because the inverse leverage 3 times ETF of this ETF is at its
It's
annual lows.
correct.
Yep.
Okay.
Yeah, you can chart the Qs because it's a single ETF right there where
Yep.
Lawton's doing it. Yep. So
Mhm.
100%.
Okay. Sorry, that was very confusing.
It's all good. It is confusing, guys. I mean,
it is
that's
it
okay.
is really complicated to explain. Yeah.
Yeah, like you just write down on a sheet of paper the mathematical approach to it, and then it starts making more sense. But there is slippage. You got to understand there's slippage in any ETF that's got 2, 3x, whatever. Just like Lawton said. That's awesome. Thank you.
Absolutely. All right. Next question. Paul says, "Good afternoon, guys. I really enjoy watching you all. This is for Ben. Ooh, for Ben. Could you do TA on SUI? Where could we see a near-term bounce? Thanks."
Perfect. Okay, so SUI, will you switch my chart over? Awesome. You've got this beautiful upsloping trend line that goes from the lows of August 2024, connects to this pivot right here from April 2025. This would be the third hit. So as price action gets back into this upsloping trend line, you're going to get support. So I would say my support level would be $2.83. That's your first support. If you start getting a break below that, your next level of support is going to be this low pivot at $2.31. Pretty
Awesome.
easy. Yep.
Simple enough.
Nice and easy.
Yep.
Okay. All right. Next question says Jose says, can you guys go over LAC Lithium Americas? I was watching it around 9:30, 10 o'clock the other night, and I had seen it had a huge pop up over news about Trump's deal. How do you guys feel about that situation and its long-term and short-term outlook? Good question.
Yeah.
Well, my guess is, so you could have some buying power or continued buying power or pressure in this stock, but as you notice, it bumped up to $7 and got a 14% pullback. So if you're looking at this as a long-term investment and you don't mind dollar cost averaging into it, or holding longer term because you think that this stock is a great company, or you don't even care if it's a great company, you just think that there's a lot of potential in this particular company, then hold long term. An ideal location to buy would be $3.11, right? Or if you can start breaking above this double top. So it hit this resistance level right below $7.65. If you can start breaking back or breaking above that level, then I could see that there's a continued buying pressure and this could push LAC continuing higher. But at the time being, this isn't something that I would play. Just kind of similar to what's happening with a lot of these other meme stocks. You're getting these huge, big pullbacks, and it doesn't necessarily mean that there's a lot of market sentiment getting into theirs. This could be a lot of retail investments, especially at $6.35.
Mm-hmm.
Absolutely. All right, Drew. Ollie says, please share the charts of Oracle. Nothing else, just Oracle.
Oracle?
You have
All
any? Just Oracle. Take a look
Let's
at
check it out.
Oracle.
Oh, I went over this the other day and trading the close. So check this out. So let me just go over the larger time frame so you can see this parallel that I've got. So you can see this parallel. It really encompasses mainly the majority of all the price action on this chart from basically 2000 all the way up till we broke out. So we zoom back in to this breakout scenario, and this is on the weekly time frame. You see I've got a pivot to pivot for this trend line. That's going to be the first area of support on the chart. Zooming into the daily time frame, you can see here too, when we broke up on earnings, if you know anything about the confirmation signal, great. If you don't, check out Gareth's Winter Trader Series. It's critical to understand what breakouts are going to do, because this broke out, as we see with this inclining trend line right here, broke out not only above this yellow trend line, but it broke out above this longer term parallel. And when it broke out, it's never confirmed. It's just broke out, and that's all telling me price is likely coming back down, and that's what it's doing. First level of support is going to be here at 271.51, followed by 247.15 on Oracle. So if you missed the boat and you're looking to get in, I would sit back and wait for something like that. Another way, and one of my favorite things to do whenever I'm looking at, let's get rid of that. When I'm researching different levels to buy, I look where price has broken out of. So this is a lower pivot, right? Take a fib retrace all the way up here and then start seeing if some of these levels align, right? And I can see that this fib level is aligning with this pivot top right here. So yeah, that kind of makes sense. Then I'm going to take this up here to this most recent breakout and start isolating down levels too. And as I mentioned, right here along the parallel will be one, and then also right on that pivot. So the fibs are all kind of displaying exactly what I said, that these trend lines are going to be providing support. They're kind of backed up with the fibs, as I said right there too. So that's what I see on Oracle. I see Oracle needs to come down before it considers going back up. And even the RSI was showing that too, right? We just ripped higher, and now price on the RSI, or at least value, starting to come back in, all translating to what we're seeing on the chart with the price. If we go to the weekly, it's still overbought, even though we have retreated. And look at this, we've retreated a decent 17% from the top, and on the weekly, it's still up there at the top range of being overbought. Crazy stuff on these tech charts. I think this all really kind of highlights and magnifies what we said earlier about the S&P 500 requiring, or at least needing, a 5 to 10% pullback, because some of these things have just gotten out of hand. It's just, they're off the chart, they're out of parallels, they're above trend lines, and they're starting to come back, but we're just not seeing just a typical, let's just take profits right here, right? So, it's all illustrated right there on the chart. It's pretty fascinating stuff.
Absolutely. All right.
I think
Next
one was
question.
Skip on NWL. Do you want me to just cover that real quick? I see it looks like Ryan. Did we go? I don't think we went over NWL.
Go for it.
Okay. Newell Brands. This is a little different than the AVNT. And I brought up the SMAs, and this is for Ryan. Ryan's asking for different buy levels on this. It's got a similar pattern down here where it's bouncing, and approaching this third hit to this trend line at $4.81. Notice, though, this death cross occurred way back in November of 2022. So it's not a recent occurrence. And on top of that, we're at the lows of the chart. So I love bear flags at the lows of charts. I'm willing to go ahead and take a risk. Even if that bear flag works out and price starts going down a little bit more, usually bear flags fail at the bottom of charts. So I'd be more inclined to get into something like this than I would at AVNT. And that should cover that for Ryan. Hopefully that helps you, sir.
Gotcha. Okay. Next question. Aaron says, "Hey guys, I've been watching the head and shoulders on the daily Nike chart play out to its measured move. I can answer this question. The move brings it to the middle of a gap fill. Do you see a bounce before moving down to gap fill? Thank you in advance." So you're talking about this gap fill. I'm assuming because it's the only gap fill on the chart that's not up here, and you said head and shoulders, so it's bearish. The first thing I want to say, and let me remove these drawings, is address your head and shoulders pattern, right? So you're talking about this, right? This is your head and shoulders pattern. The only problem I have with this head and shoulders pattern is that in order for a head and shoulders pattern to be valid, the middle head has to be the top point, right? And you can see that this shoulder did cross above the top of the head, making it not really a valid head and shoulders pattern, right? But let's just chart it anyways as if it was, a valid head and shoulders pattern, because you're talking about the measured move. And let's say this is the neckline. Let's find the measured move. So the measured move is to halfway down to halfway in the gap fill. Basically, the measured move would be to basically right here, about 1% lower than today's low of the day. Do I see any more support prior to this gap fill? Sure, there's plenty of levels of support. If you see there's previous price action here, you could consider this previous gap fill as a level that's kind of coincides with this pivot high here around the $65 level. That could provide some level of support. Additionally, if I go like this, I might be able to draw some trend lines. Let's see if I have anything. That's quite a bit lower, but I'd be targeting this area instead of this gap fill. But just so you know, this head and shoulders isn't technically valid, but I would look around the $65 level mark as a area of support for Nike. I don't know if you guys have anything else you want to add to that.
Yeah, let me go ahead and share my charts real quick.
Absolutely.
Okay. So I've actually noticed that you've got this downsloping trend line. This is why price action got a bounce, right? So you have this downsloping trend line, connects a pivot high at $110 from the 22nd of December 2023. Look at how price action stayed right below this trend line. Once price action got above, you got some support. Now it's coming back down right into that downsloping trend line. So that's why it's catching support currently. So you've also got this upsloping trend line right here that connects the lows from from April lows, secondary hit. So now we're getting below this. This is the third hit of a trend line. So on a technical basis, this actually does favor a move back up. So what I would be looking for is a bounce all the way back up to $73.93. Now, if price action ends up heading below that, you do have additional support at $66.61. If it fails to get support, then I think you're likely to head back into the $62.52 level.
Gotcha. Cool. All Lyle asking when we can anticipate a potential bounce on SOX, UVXY, and Wolf.
Well, we covered Wolf a little bit ago, and Lyle, also do note, we took 50% gains on Wolf in the last week or so, and I understand. Hey, when stocks don't go our way, it's never the best feeling. However, in this game, we're going to have losers. It's no one is flawless in trading. And then also in swing trading, we're going to have positions go against us. It's just the nature of this business. So if you come into the trade with that mindset, then you understand that when certain levels get broken, the very next level, especially if price moves to it rapidly, could allow you to accumulate more. And as long as you know technical analysis, then you can accumulate more. And as we've displayed on that silver chart, on basically any chart you see that rips higher, usually just drops straight back off. And if there's straight downward pressure, usually the bounce is going to be very reflective on the price movement coming down. So as long as you understand that, and when you're getting into positions and don't over leverage yourself, then you can maneuver through these positions, especially when we're guiding you with different technical levels of support. I think that's really kind of the critical component to keep in your mind when you're trying to approach these trades. It's no one out there trading will have 100% batting record, getting in a trade and never be out of the money. It's just not possible. It doesn't exist. And if that's what you're chasing, that's going to be something you're just never going to find. So at least approach it with the right way. Then that helps you maneuver through the position to get to profit areas effectively and more often.
Absolutely. All right, and I see Ben has XDCs. It should be XDC USDT. Should be a crypto, Ben. But Sarah says, "Happy Friday. Nice to see you, Sarah. Is the XDC Head and Shoulders completed? What are the levels of support and resistance of the next move?"
Oh, that makes more sense.
Yeah, I saw you looking. I was like, "The Canadian what?" I was
know.
All right, that's not. No,
Well, it says XDC dollar, so I didn't know if it was like other ways it's a currency. Okay, so you got this nice bear flag that's going. Bull flag that's going on. So XDC, actually, I wouldn't probably be interested and got down to 55.38, 678. This double bottom area right here. Overall, this chart is kind of one of the stronger altcoins. So again, but this would be the first level that I would get into it. Now, this goes back to the fact of, hey, are you a long-term investor? Are you somebody who believes in XDC USD and want to hold on to it for a longer period of time? Then it is a stronger altcoin. So I guess you could hang on to it for a little bit longer. Dollar cost average into it. Just make sure that you have a specific amount of money that you're willing to, I guess, lose in order to maintain this position. When I say lose, because like Drew was mentioning, none of them are they're not all going to be winners, and that's just kind of the nature of things. And so we advocate not investing more than you're willing to lose in anything.
Mm-hmm. Mm-hmm.
Yep. Let's answer like maybe 2 more questions if you guys are okay with that.
Sure.
Yeah. All right, I got one for you, Drew. Brewski says, "Good afternoon, guys. Nice to see you, Brewski. I'm looking at 2 high-paying monthly dividend stocks and wondering which one looks better than the other. Little competition, HMAX or UMAX." That's all I have. Have a great weekend.
It sounds like maybe this might be more up your alley, Juan.
Yeah, I didn't read the question. I'll take it. I'll take it.
All right.
So for those of you who don't know, I'm the one who runs the Dividend Trader here at Verified Investing, part of Smart Money Stocks and ETFs. So yeah, this high yield, this is Toronto Stock Exchange. Let me see what their dividend payout is. This one looks like it gives 1%. Am I correct? The amount is going to be 16 cents. So that's about 1%. Of that 1%.
Oh no, it's 13%. HMAX is 13% dividend
13%.
Yep.
Okay, 13%. All right. That's
13.01. Yeah.
13. Oh, right here. I see it right here. 13. Yep.
Yeah.
Amazing. Sorry, I didn't even look at that. The other one was UMAX. And that's around 14.6, like massive dividends payouts. Absolutely. So if you told me that I had to look at this chart, UMAX and HMAX, and had to decide which chart I liked better, what do you think I would say?
My guess,
Dividend aside.
for
But
you
you
to
guys,
buy,
what do you guys think?
for you to
Huh?
buy, I bet you'd be more interested in buying UMAX. Is that right?
Absolutely, 100%. If you ask me which one is better, absolutely UMAX. And the reason why is UMAX is pretty fun. And again, full disclosure, I've never traded this before. Ben and Drew have never looked at these charts likely before. From its highs down about 17%, whereas HMAX is coming off of these lows here in April, currently up 25% from its Liberation Day lows. So while UMAX is up a little bit as well, UMAX is way lower in the charts. You have a couple of down-sloping trend lines that you could draw looking for a breakout. You have one right here on UMAX, right, that it's almost running into. But should this trend line break, right, you could look for a breakout and a potential retrace. Looking for a move higher, you can enter on the break or on a potential retrace. And worst case scenario, you're chilling with a stock that pays a 14.65% annual dividend. Definitely UMAX, I would say.
Yeah, not too shabby.
What do you guys
there.
think?
I think I'd take that. I like that. I love it, man. I'd pick UMAX too. What about you, Ben?
I would choose UMAX.
Perfect.
All right. Last question, guys. And I know there's a lot of questions, so I apologize. We're just kind of out of time. Dan says, another question. First of all, I love this service. Gareth mentioned a while ago that he won't be doing this forever, maybe 2 to 3 more years. What do we all do if he hangs up his hat? I'd love to continue with this as I don't have the time or desire to figure out how to find / pick and analyze these charts and follow the headlines, earnings, jobs reports, non-farm payrolls, 10-year yields, etc., like you guys do so well. Would you guys be the gap fill?
That's the goal.
Yep.
That's our plan. Absolutely.
Yeah.
Yep, we got you.
Yeah, absolutely. You know, I think that was certainly the goal when I came aboard here. We're trying to alleviate some of the responsibilities that Gareth does have. That way we can keep him here longer, folks. So help us out. Give us those thumbs ups. Give us those subscriptions. Jam those buttons. That all helps in alleviating some of the duties for Gareth to make sure that we're here to help out so that he can be here a long time. And I guarantee if we're successful in doing that, I see it very hard from him stepping away from doing day trading and or swing trading. This is part of his passion. It's our passion too. That's why we're here, guys. We love this stuff.
Yeah, we're literally here for you guys.
Absolutely.
Yep. And so,
all right. Well, I just ask you all to consider liking and subscribing. Thank you so much for being here, guys. It really helps our channel out if you would consider following us and subscribing to us on YouTube at Verified Investing, just so you get notified every single time we go live for another show just like this. Coming up very soon, we have the weekly wrap up from the man himself, Gareth Soloway, around 3:55. So you can look forward to that in about an hour. But anyways, this was the Smart Money Q&A. Thank you so much for joining us. My name is Lawton Ho, and I was joined by
Benjamin Poole
and Drew Dosick. Thank you, guys.
All right, guys. Have a great weekend, guys. Bye.
Take care.